far this week, but that really hasn't materialized either. The British pound, we were saying earlier, was particularly strong today, and the move seemed to appear around like 11 GMT. Um, there really wasn't anything there on the docket that day that time rather that seemed to do much of anything. So it doesn't really look like what's going on here was sort of motivated by XYZ headline. Uh, it just looks like the pound had a particularly strong day. What's interesting is that it ultimately, if you look at the daily chart, it ultimately doesn't manage to take out the preceding swing low. And that's interesting here. It just barely holds. And what's sort of the interesting context for that is if you look at your momentum indicators, they're actually showing you positive divergence. This is the kind of thing that might happen or that you could expect to see when a bottom is getting carved out. So you set a nominally lower low, but ultimately you don't close under the preceding bottom. So it's sort of a gut check on a turn that ultimately fails. And then you find a bottom somewhere basically here. I don't think you have confirmation. I actually got a little bit long earlier this week on what looked like a bullish morning star that formed basically at the low that has now held. But so I'm a little bit long here and hasn't worked yet, but it didn't shake me out today. This is starting to look a bit interesting. If there is confirmation and we start to anchor right around here, this could be a compelling long. Similarly, the Canadian dollar did some interesting gyrating over the past several days. It could be setting up a compelling long as well. If you look at the internals of 6C and you take a look at it on, let's say, like a 4-hour chart, it looks like you're in a range, in a choppy, ugly range.
Before we go further, just the volatility here, by the way, utterly through the roof right now, 101.8.
Yes.
Yes. And the Canadian dollar, for all of its warts, trying to sell puts in this environment, I think this is just worth noting. We've had elevated vol in the Canadian dollar where the high end of the IVR has been mostly above 80 for the better part of the last 3 months. This thing has not been able to post a close back above its 1-month moving average for the entirety of that time. And we just had another touch of it 2 days ago. So, as far as I'm concerned right now, yes, I can see a lot of people out there saying, oh, I really want to sell puts in this thing. But this has been a falling knife environment for going on month number 4 now.
Yeah, no, I'm not looking to sell vol here. I've just outright bought the micro future. And the logic, basically, if you look at a 4-hour chart, say, you can kind of see it. The big green candle that we see on a daily chart doesn't mark a break, but when we look at a more granular timeline, we can see we've attempted a breakout out of the congestion range that developed there from about mid-December. And so it seems like an interesting thing to consider, especially since if you look at the last several candles here today, they hold at what is essentially the last line of former resistance becomes support defense. So you'd need it to hold right about here and rally, but so far so good narrowly. So I'm a little bit long this. I think there's a bit of room. So that's about it. I'm looking at, and this is how desperate we are for news flow. I'm looking at the ADP report today coming in a little bit light. I look at the employment components of the ISMs, which the headline ISMs were very strong, especially, of course, in services, but the employment components were soggy. And that's an interesting setting of the stage for the jobs report on Friday. If we get a sense that maybe the Fed doesn't need to get so hawked up on its positioning that we've basically seen the lows in bonds, then the dollar is going to probably take a leg lower. And so that's my exposure to that idea here.
You're looking through the ADP report.
See? Desperation. There's nothing going on.
Never. What did Robert Downey
Never
Jr.
ever
say?
look to the ADP report, by the way, is a great rule to have.
Yeah, it was in Tropic Thunder. He said, "Never go full macro. Never go full macro."
Yeah, that's right.
I think that was the line from Tropic Thunder. I can't remember.
Yeah.
Yeah. No.
There's no news. What are you gonna do?
Yeah, I mean, listen, it was one of those days. I mean, the pound is really interesting because I see that a bunch of, overnight, some of the people that I follow in the UK, there were some new electricity pass-throughs published because their rates are variable over there, and the recent reset of UK electricity rates for the next 2 weeks are like 4 times what they were for the prior 2-week period. Right. And so it sets up this, I don't want to call it like Liz Truss lettuce moment, but I have been, so I will continue to do it, where you see UK gilt yields at their highest level since 1998 and then some, and the British pound feels like it's staring stagflation right down the pipe. They're going to have sticky inflation. The currency's falling. They don't get the insulation of a stronger currency like we do, even on a relative basis versus some others. The economy's been in such a difficult position post-Brexit, and that continues to get worse. I see literally no good reason why I would want to be long the pound here. And I get the volatility environment that a lot of people are looking at. The currency options, they are going to be trading tomorrow. Currency futures are trading all day tomorrow, by the way. And those European markets are open full day, so they're not exactly observing the death of a former U.S. president. So these should be moving still. Not a lot of UK data tomorrow morning, though, worth noting. Nevertheless, though, I mean, this is not where we were in August, September 22, but we're still in a pretty uncomfortable position. The context there, of course, is right after the Ukraine war, European natural gas prices go through the roof, trading at levels that are equivalent to like $550 a barrel in oil terms, US dollar oil terms. At what point do we look to the bond market? I keep asking this question. I asked it on First Call with you on Sunday. At one point, do we see the bond yields get to a place where investors go, you know what, this is just gravity at this point. This is just math. We're not going to be able to outpace through corporate earnings growth, the increase in the cost of goods sold. We're not going to be able to. This is going to weigh on our ability to project the strength of cash flows into the future. At some point, you have to take earnings down a notch, your estimates.
Yeah.
When? If not now, when?
Well, I don't think that what the markets are telling us here is that they're not worried, but I also don't think that they're telling us that they know to be worried in full. So when you see the kind of response that you got to ISM yesterday, right? Nobody thought going into this week, and in fact going into December, because really the majority of the policy adjustment, the hawkish rethink in Fed policy expectations and thereby in rates and in borrowing costs, that happened between September and November. The yield curve, in particular the Fed funds futures curve, has barely moved since early November. What the Fed did in December was not earth-shaking in the slightest, because by then the market's already moved. By then, what the Fed was doing with its hawkish rethink was essentially endorsing where markets already went, marking up break-even rates, marking up the whole yield curve, 2s and 10s, marking up the dollar. So we haven't really had a situation where anybody would have been confused by, oh, the U.S. economy is a little bit hotter, we need fewer rate cuts. But then you get the ISM number, and the markets go, wait, like this is more. This is news, and equities very pointedly sell off. So it's not as if the markets aren't sensitive to the idea that we're getting to a place where something has to give, where it's going to be very difficult to maintain earnings expectations as they stand if rates keep going higher, that we're at some kind of an inflection here. And I think what the markets really are waiting for is to see whether they should be concerned or whether that ISM number is a one-off. And to see, like, where is the economy actually? Is it still heating up? Now, the Citigroup data that I like looking at that measures the performance of U.S. economic data relative to forecasts, that has been a very good filter for looking at what the markets think about the business cycle as relative to Fed policy and the sequencing there. That's been cooling since mid-November. And that's where we sort of got the idea. I certainly got the idea that just like in September, the Fed looked like it was more dovish than reasonable because by then the flow of data was already going the other way. It was already improving. So the markets readjusted to something more hawkish. When the Fed followed them in December, data was already cooling, so it looked like maybe things were ready to go the other way. But they haven't, and the ISM number only complicates that. Now, at this point, if you look at that Citigroup index, it's basically at zero. So expectations and reality are aligned. We're really standing at a knife's edge. This thing is going to go one way or another. But we need some sort of tangible data, and NFP is probably the next opportunity. We need a tangible piece of data or a tangible catalyst of some kind to tip the scales. We are literally dead even here.
How much will the non-farm payrolls report on Friday weigh in on all this? If we get a hot number, our Treasury yield is about to take the next leg up. Are we gonna? We've already pushed rate cut odds back. We have one price for the first half of this year.
Yeah.
Two for the year total, right? It's like barely June and November of the pricing. You're on the precipice of basically kicking this down to one.
Yeah. I mean, you're at about 40 basis points, 39 basis points for the year. So, yeah, you're narrowly expecting two, but it's close.
Isn't that going to be the bottom in treasuries, right? We saw this last May. May 1st, you get a 0.3% chance that the Fed hikes rates by 25 basis points at some point in 2024.
Yeah.
And when the Fed comes out and says, no, we're not at the FOMC meeting that day, then bonds take off for the next few months. They rally up until basically through September, early October, right?
Yeah.
So
well, because by then the data's cooling and the Fed goes, we're reluctant to cut, and there's no progress on inflation, blah, 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 blah. And the market goes, what are you kidding? Data has been cooling for a month and a half now. Stop it.
So if the juice has been squeezed out of Treasury cut odds,
yeah,
then as we decompose what's driving the long end of the curve, then the only thing that could be standing in the way here is it the uncertainty over inflation moving forward?
Yeah.
I mean, the FOMC minutes were pretty clear today. They told us on December 18th we're not thinking about Trump's policies. And then we get the minutes today and it's like, yeah, we're very clearly worried about what Trump's going to do for inflation.
Yeah, we're concerned. Yeah.
Right. So like the
uncertainty is high.
Right. And they if you read through them line by line, it's pretty clear that like we don't know. Not the policies in the first term, not all of them were inflationary. Mm-hmm. We don't know what's going to happen, but like the paths are now wide open, so to speak. And so is this the uncertainty over how tariffs can actually impact the economy? Is this why treasuries are trading the way they are? Is this the uncertainty that term premia expansion? You need to be compensated if you're going to hold fixed income during a time when trade wars may start up again.
It could be. that is certainly a possibility. That essentially you're just saying, you know what? Who knows what inflation is going to do? But the Fed is telling us the data is volatile. The fiscal side looks like it'll be volatile one way or another. And so if I'm going to be lending money, sort of in simple terms, at a longer tenor, then I'm going to want more compensation for who knows what risk. Now, IV rank here is not the highest, but it's also not negligible. If you look at where the move index is, which is sort of overall view of volatility in the fixed income space, it's not sort of screaming, but it's not nothing. We've seen that sort of narrowly over the past, let's call it almost a month. The low was about December 12th. We've clawed our way now to the highest reading on this move index since late November. We've been drifting higher. Now, it's not a whole lot higher. We were a lot higher on this in early November. We haven't even retraced 50% yet of the decline from the beginning of November to about the middle of December. So, yeah, there's a slight pickup in Treasuries vol, but it's not anything scary or anything that's out of sorts. In fact, we're probably slightly on the lower end of average here for the past several years. So it's possible that that's what's going on. I think at this point, the market is just struggling to really make heads or tails of anything. And so the last piece of headline news that appears is the last thing that happens. We basically did absolutely nothing in December for the most part on rates. We get one ISM number, and there's a move. I think that's what's going on. What's going on now? We're just taking it headline by headline, number by number. The FOMC minutes didn't say anything scary. Okay, next. Of course, then NFP is the next thing. And the question will be, well, if data now is tending to meet expectations, looking at what Citi is telling us, those analytics, then really the big head scratcher is what happens if the numbers are about in line. Because then the market gets a chance to say, yes, I care about fiscal policy risk, or no, it's still all about the Fed. Who knows anything about fiscal policy here? If I don't get a Fed lead, I'm not doing anything. And that'll be an interesting thing to surmise.
Yeah, let's turn our attention to metals for a little bit. It was a good day for metals, despite the back and forth that you see in equity markets and the back and forth you see in bonds, particularly at the long end of the curve. Gold continues to inch up. It hits a new year-to-date high, which I don't know if that says anything. The year's less than a week old, or just a week old now in trading terms. I digress. Silver is trying to poke its way back through about $31 an ounce right now. This area where the market's toyed with as resistance and support going back to July, the uptrend off of the August and November swing lows here. We can't quite get through. On the other hand, copper is up 1.74%, a really nice move here as it seems like we're working our way off of a bottom right now. Are metals the canary in the coal mine throughout all this? You know, you would think that the 20-year yield up at 5%, the 10-year at 4, encroaching 4.7%, 2 years holding up above 4.5%. You see all these things, the strength in the U.S. dollar, gold, silver, these dollar-denominated metals should be taking on the chin. Is this a precursor of something to come?
I mean, if you look at copper in particular, and then you look at gold, what this is a precursor to is kind of muddled, because copper going higher is a straightforward growth indicator. This would tell you that there is optimism about demand at the industrial level. And very clearly, as you see a wiggle up in gold, it is not a story about that because gold is not an industrial metal, and you don't really have a strong lead for the dollar or for yield in what you saw today. So as you look at all this, you go, okay, well, if the metals are a lead, where is it leading then? Do I believe gold, which attempted to claw its way higher? Do I believe copper, which had a much more convincing rally? That convincing rally maybe is an indication of something positive growth wise, but what that is today is unclear. The situation in China, the largest buyer of copper, certainly has not seen any notable positive development over the past, let's call it 24, 48 hours. Nothing has really changed. So it's unclear exactly what to read from the metals here. Copper would tell you that there is a risk on flavor, but equities, gold, the dollar, all of them would contest that idea. So maybe copper is just doing its own thing.
Maybe it's China. Who knows? Australian dollar likewise down today, although off the lows. Chinese shares, FXI down by 0.42%. It wasn't really a strong day or too exaggerative a session either anywhere. One thing that disappoints me today, though, is what's happening with the semiconductor stocks. Yesterday, we were looking at SMH because we did have the breakout at the start of the week. We then had the pullback. Today, we are just not really ready to give it up. Listen, if you're a bear, you look at this and go, hey, we're closing lower today than we did yesterday. And if you're a bull, you're going to say, you know what? We got that nice wick. That's more than half the candle, right at that 1 week moving average, right up where we should be finding support. Sucks that this is closed tomorrow. I'd like to get a little bit more resolution here. But yeah, it's not so much that NVIDIA pulls back in today. I don't think the NVIDIA price action itself is really the story of today's market. It's down by 0.02%. I think it's what Jensen Huang says about the variety of different quantum computing companies. He says that quantum computing, those that are going to make a real difference, are probably 15 to 30 years away. QUBT Quantum Computing Inc., which saw a huge explosion in share prices from near $1.50 a share back in November, trading as high as $27.15 a share after Google's Willow project announced that it had achieved, a computation that if it was done in traditional computing, there's not enough time left before the heat death of the universe to figure out, which of course people like Mark Andreessen came out and said this is clearly evidence of parallel universes existing. You see, Google's quantum computer, of course, is tapping into the multiverse and borrowing time from across the multiverse to complete this computation here in our little Earth 616 sliver. Obviously, Jensen Huang probably knows a little bit more about GPUs and computing than Mark Andreessen does. And sure enough, his comments sink these quantum computing stocks across the board here today, Ilya. Sure. So much for that, right? We had semiconductors last year, the year before. We had a little bit of quantum computing in 2024. It's getting hit on the chin here today. Are you surprised that we're seeing on Q? Are you surprised that this bubble is being deflated so quickly? And ultimately, is that a good thing for the market that we're relieving ourselves of some of these speculative excesses on the technological frontier early on before we put billions and trillions of dollars of capital behind them?
It seems like what this says is the market is not prepared to jump from the AI hype to a new hype without first kind of digesting the preceding one. That the idea that we've talked about here with Dylan at length, the sort of super glide idea that we are in the next great technological age and that we're going to go from thing to thing. And first we have AI and then quantum computing and then teleportation and then Skynet takes us all. We clearly, I think, are getting less enthusiasm here, at least for what would be the next kind of big, oh, this is the next whatever it is phase. Um, Quantum computing was obviously the next kind of natural candidate for saying, well, if you're building out for AI, we'll build out for this next. Yeah, not really. Not so much, at least not yet. Uh, for me to think that anything like a return to less effervescent valuations is afoot, I would need the AI hype to start to really fade. And I think to really see that, you don't just see Nvidia stall. You got to see some failures. You got to see some players in the space take it in the teeth, and that may be coming. The thing that I always revert to talking about when I think about AI, and that I always revert to thinking about, is every other time something like this has happened, it's come in broadly two acts. The first act is always short, but very exciting. Lots and lots and lots of hype, lots of hope. Everybody suddenly has the same idea and goes, oh my God, this is a transformational sort of change, jumps on it, extrapolates wantonly about what it'll mean. There's massive overbuild. But then there is the sobriety phase where all of the weak hands, all of the hopium is washed away, and whatever thing then builds out to its longer term positive narrative, be it railroads, be it the United States itself, frankly. I mean, the colonies and their debt were very much a speculative bubble at one point, be it telecoms and the dawn of the internet. So there's all kinds of reasons, I think, to think that AI is indeed the future and that the broad strokes of the conversation make sense on the positive side, but also that we haven't seen the intermission, as it were, between Act One and Act Two. And for me to be a believer in the long term narrative, I want that intermission clear as day.
Quantum computing ETF, which doesn't even have Google in it last time I checked. That's down 4.61% today. The four big names in the space, Ion, quantum computing, qubits, Rigetti, those are all just in D-Wave, taking it on the chin right now. We'll see whether or not this materializes to anything in the future. But it's funny, some of these companies just don't even make quantum computers. They make some things that are related to quantum computing themselves. If we're 15 to 30 years away from a commercial application, Ilya, there's part of me that says, well, some of these companies probably should be trading back to where they were in November before junk took over the market. I digress, though. I think it's a good thing, quite frankly, right? We talk about, and I said a few weeks ago when this first came out, you're looking for the next thing to inflate the bubble. Part of the reflexivity of bubbles is that you find a piece of evidence that allows you to keep believing more or less, right? And quantum computing could have been that next leg forward, and perhaps it's not. And if it's not, then that poses a narrative challenge where in the short-term speculative, you have one less thing to hang your hat on, one less item of interest for traders to chase after. And if rates start to go up, you start to look around and go, maybe we should just cool things off. We're bypassing DC and Puerto Rico for statehood. We're going to go to war over Greenland, and the technological progress isn't there. Let's take some capital off the table for a little while and see what happens. Ilya, the rest of the week, is it just NFP and bust for you? Like, what are you looking to accomplish here in trade? Obviously, it's make money, but like, is there any particular asset or ticker you're looking at and going, if this just moves a little bit more, I'm ready to pull the trigger?
I think it's really just watching the currencies here, because they're not going to take a day off, at least in spot markets and in the futures. So it's really just watching how the currencies position here. I think I'm increasingly convinced that the U.S. dollar is running out of juice, that it's bottoming here for the euro, for the pound, for the Canadian dollar, maybe for the Aussie, although that one's more tenuous. Um, this is by no means to say that the longer term advance for the U.S. dollar, the multi-year one, is over. Not at all. I think the structural rise in the dollar is only going to get more significant uh, because, frankly, in a deglobalized world, which is increasingly where we're heading over the next 40 years at minimum, the story seems to be increasingly that of the many houses on the global street, virtually every single one of them looks in worse shape than the US. And so, whatever concerns you have about what the US economy looks like, what US financial position looks like, the US debt dynamics look like, it is almost to a country worse everywhere else. And so, and obviously, I mean, I'm not talking about every single micro state here, but for those economies that really move the needle on global growth, that really have investable markets for us as traders, not just as long-term holders and capital allocators to participate in, there's no question that the U.S. is very much in the lead and that it will be very, very difficult to change that. Be it the primacy of the dollar or of U.S. capital markets more generally. So I think that much is clear. And so the course for the dollar more generally is positive. But I think over the past 2 months, 3 months, it's become a bit overcooked. And so I was talking before about buying the pound. It's not because I'm terribly optimistic about the UK. It's because I think the dollar is a little expensive here. And so that's really it.
Why not do it? If you want to get short the dollar, why not do it versus the yen, where maybe the BOJ turns around and says, if the Fed can't cut more, then for us to maintain the yield differential that we want to do, we're going to have to raise rates faster than we anticipated, right? Because if the Fed is not pushing on this end, then the BOJ's got to push on this end. So why do it through the British peso?
It's unclear that
I just hate the pound. I just don't. I just like I can't. Everything going on in the UK just really. There's a reason why we became our own country, folks. Right?
Yeah. Yeah. No, and as I say, I'm not looking for pound upside because I think the UK economy is going to magically give us anything. I do think it's interesting that the Bank of England is not nearly in the position to cut that the Fed is. Their inflation situation is only more complicated and refuses to go their way, even as the economy cools. So their situation is probably extended wait and see mode, whereas at least the Fed is on the menu to cut once by mid-year. If you look at the outlook for the UK at this point, they are baked in for 55 basis points in cuts this year, but looking at the inflation dynamics, that might be overdone. So I think in relative terms, yeah, maybe there's something there, but it's really a dollar story for me. The reason I wouldn't do it against the yen is because that exchange rate is basically just a bet on yields. It's a bet on ZB. 6J and ZB are, to me, basically the same exact idea. To want to be long the long end of the yield curve and wanting to be long the yen, it's the same thing. And so with that in mind, you need confirmation on both. I'm certainly not opposed to getting long yen here. And you and I talked about yesterday, it does look like the yen could be bottoming here, but I don't think you have that level of confirmation here that you need to really call that. You need sort of at minimum, I think, a turn back above, let's call it 63.40, 63.50 on 6J to really tell you, okay, it's on. Because right now what we're seeing is we're setting new lows. In fact, today we set a new about 6-7 month low.
Going back to last April.
Yeah, going back to see on the continuous contract going back to July.
Okay.
So yeah, so it's not really doing what you'd want to be expecting if this were a tradable bottom. At least the pound held its low. At least the euro held its low. At least the Aussie held its low. So I think for now, I want to be long yen, but I don't think there's anything actionable here to say that this is go time.
Our quick last question, because we're out of time.
Sure.
Are we back in yen intervention territory?
I don't expect so.
All right. Well, we'll cover it tomorrow. Well, I guess we'll cover it. Are we on tomorrow? I don't think so.
No, I don't think so.
We'll find out.
Right? Yeah. But when we talk about NFP on Futures Power Hour on Friday, we'll touch on it then.
Yeah. There's no overtime tomorrow, no Futures Power Hour tomorrow. I will be back on Friday, 1 p.m. Eastern till Central for Futures Power Hour to do a post NFP recap. So be sure to check that out. Tomorrow morning, we're going to have something published on the Traders blog as well, because futures will be open halfway through the day for equity indexes, and then a whole bunch of them will be open all day long if you're a commodity trader. So be sure to check that out. Otherwise, overtime, out of time for this Wednesday, January 8th. Stick around, though, because there's more Tasty Live coming at you at night. First off, Ilya Spivak, he's sticking around after the break. He'll be with you for Macro Money. See you there.
See you there, everybody.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0, really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, Just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do. Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back.
You stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
And we are on the other side of the FOMC minutes, which did very little, facing a closure of financial markets for the morning of recently passed U.S. President Jimmy Carter. And then on Friday, what is possibly the week's biggest piece of event risk. So the markets are coiled up. They're ready to jump, but which way? That much remains unclear. We're going to try to make some sense of it on Macro Money here. I'm Ilya Spivak, head of Global Macro at Tasty Live. And the focus for us here is going to be to just look straight through the price action that we are likely to see across a handful of markets that are going to be open tomorrow. There's going to be some action in the futures, in particular FX futures, some commodities. There's going to be, of course, spot markets open. And so we're going to get at least an indication of where sentiment is for those assets that we can see there. Again, currencies, some commodities, like metals in particular. But outside of those things, we are not going to see a whole lot. And the main story, as far as it presents itself for now, seems to be still about interest rates, the Fed, the cost of money, what that is going to mean for investors in the year ahead. So we'll start here by taking a look at where that story went today with the release of minutes from December's FOMC meeting. Spoiler alert, didn't go very far, but some of these indications that we got are notable. And then, of course, we'll take a look at what is setting up for the jobs report and how that might influence the narrative and, in so doing, of course, move around asset prices. So We know what the bias for December's policy meeting was going to be because the market's already made the adjustment going into it. You can see here the yield curve from September's Fed meeting. Then you can see, of course, the very hawkish shift that occurred between then and the November meeting, where subsequent repositioning has clustered. So we can see December's meeting doesn't really take a long leap from where it got to by early November, and currently we remain very much clustered in that area. So the real story here was the idea in markets that the Fed got too dovish in September, that the economic data did not support all of the rate cuts that they wanted to do, and that we are going to have a Fed that has to pivot. And this was that here. So this was obviously sloped much more aggressively in September, and then by November already not. So we can see here that at this rate, we are looking for rates to finish this year just a little bit off the 4% mark, whereas before we were looking for it to be sub 3. We can see this adjustment in markets since September, inflation expectations rising. This is at the top panel here, the 5 and 10-year break-even rates. Those are the inflation expectations that are priced into bond markets. We also see, of course, over the same period of time, nominal yields go up, both the front and the back end of the yield curve, the 2s and the 10s both higher, the dollar is higher, the yield curve in the yellow bars here, the spread between the 10s and 2s, that's steeper. So all of this already occurs between mid-September and early November. So when the Fed comes in December with an updated set of economic forecasts and an opportunity to recenter its position, it delivers as one might expect. Here's the policy statement. We can see virtually no major changes between November and December's statement. And really the big takeaway is this bit right here. The extent and timing of additional adjustments to the target range are what's really on the menu. And if we look at the updated summary of economic projections, we see that there's really no change from September for 2024. The Fed ultimately delivers on the 100 basis points in cuts that they said they were going to do in September. They, of course, delivered half of them in one shot in September, and then gave us 2 more cuts in November and in December. But by then, of course, the markets overwhelmingly expected those things to occur. The real change was in the path thereafter. So in September, the markets saw 100 basis points or 1% in cuts for this year, for 2025. We made that smaller in December down to 50 basis points and moved the destination here a full year out to 2026. So overall, the sense you get here is that the Fed not only wants to slow the path, but also to spread the path, to make for a shallower rate cut cycle and a slower one. And so you see, for example, that in the forecast in September, you got to 2.9% by the end of 2026. Now you don't even get there by the end of 2027. So again, slower and shallower. The minutes then from this policy meeting were going to be a bit hawkish, because that's clearly the way that the positioning is adjusted. And that much we got. But there were a few tidbits here that were noteworthy. Here's some choice statements here. Most participants remarked that disinflationary progress continues, even though the pace slowed in 2024. We see that almost all participants judge that upside risks to inflation have increased. That's that hawkish tinge that got them to make for a shallower and a slower path for rate cuts. We see that all participants judged that uncertainty about potential changes in policies affecting trade and immigration is elevated. That, of course, is an input into inflation and a nod to what the incoming Trump administration may do. If we saw, for example, a rise in tariffs, that's just an extra tax on imports. That's inflationary. If we saw significant restrictions to immigration and indeed significant deportations of immigrants already in the U.S., that's a disruption to labor markets. That's likely to increase the cost of labor. And that, of course, is inflationary as well. At the same time, many participants noted that they've been receiving reports of greater economic optimism linked to expectations of easing regulations and lower taxes. That's the flip side of the expectations of what may come out of the incoming Trump administration. So on the whole, it seems like there's a concern about greater uncertainty and also reports of optimism about some of the incoming administration's intent. So relatively balanced here, not really tilting one way or another, if only just to name check the logic for having adjusted to a less dovish path as the outlook on inflation starts to get a little bit more of an upside risk bias. We also see that the vast majority of participants then judged that the attainment of the two goals that the Fed sets out for itself, the goals of price stability given maximum employment, or at least the attempt at maximum employment, as long as that price stability is not disturbed, that the risks to these things are balanced. And indeed, most policymakers seem to think that their decision to cut rates in December was, quote unquote, finely balanced. We also get a sense that the Fed is tilting toward a more gradualist view from here. That would be the sort of slow walking of policy that the forecasts imply. Most participants remarked that with the stance of monetary policy now significantly less restrictive, that is to say they've cut by 100 basis points last year, the committee can take a careful approach to considering adjustments further. And so this is a Fed that doesn't seemingly want to over-extrapolate anything, that doesn't want to be swung by the markets this way or that frequently and to a significant extent. There's also a one-off here saying that the majority of participants remarked that the behavior of equity markets, that is the strength that we saw over the course of last year, impressive though it was, reflects positive sentiment on the part of investors. Now, that seems like the world's most obvious thing to say, but the subtext there is that there's not a concern that this is somehow speculation run amok, that this is somehow undue froth or speculative excess. At least Fed officials are not prepared to say as much, seemingly, even if they're perhaps thinking it. And that, of course, gives us a little bit of a sense that, again, this is a gradualist central bank. They want to be cutting, but less so and at a slower rate, and in general want to really take their time with whatever they do next. Where this leaves us is narrowly the expectation that we're going to get 2 rate cuts this year. They're not fully baked in here, but we're close. Then narrowly 1 cut next year. Again, it's not fully baked in, but we're on the likelier side of a 50-50 chance than not, looking at what is currently baked into Fed funds futures. So it is as though everything stands at a knife's edge. If we take a look here, the Fed is finally balanced, the markets are finally balanced, and we're sort of standing at the precipice of something that follows. Everything is coiled up, but which way it's going to jump, as we mentioned at the top of the show, is less clear. As it stands, at 4.4, basically, on the effective Fed funds rate, the first time we get the next cut that's baked in here is June, and then narrowly another one in December. So the path is slow, and the scope is modest. Now, of course, the next bit of information that is going to move the needle here one way or another, as we've mentioned, is the U.S. jobs report. And the numbers here don't scream earth-shaking changes if we register relatively in line with forecasts. But of course, whether we do or not is what we're going to try to explore here. 154,000 jobs expected. That would be a climb down from 227 in the prior month, and generally within the recent range of numbers. So if we kind of look at the recent sort of averages, let's call it, from about 300 and down to kind of the low teens or the low double digits here, that 36K, something of an anomaly, but we'll take it seriously for the sake of argument. We are basically in the middle here as far as expectations. And so earth-shattering this should not be, as long as we're about here. The unemployment rate seen matching the 3-month high that we hit in November at 4.2%. Now, some of the leading indications here are a little bit soggier. So here is the employment component of the ISM survey that we just saw released over the past week and a half. And of course, the level of expansion on the prices side and the overall demand side for the service sector, yesterday's report, is part of the reason why bonds shot down again, yields surged to another high again, the yield curve steepened again, and that was clearly something that got markets thinking, well, maybe the Fed is going to be even less dovish than we thought. But when you look at the employment component of those surveys, the story is much soggier. So first, on the manufacturing side in December, we saw employment shrinking and at a faster pace. This is, for reference, just done in the logic of PMIs. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So when this employment index for manufacturing is below 50, that means employment in the sector is shrinking. And when it moves from a higher number above 40 to a lower number above 40, that means that the pace of contraction accelerated. In the service sector, it's a little bit better. At least we have positive growth here. But the pace slowed. It didn't slow a lot, but it slowed, which is a far cry from what happened with, for example, the price component of the story, where we surged to the highest reading, essentially the fastest price growth for the service sector since February of 2023. So very strong overall numbers, very strong pricing numbers, but on the employment side of things, kind of soggy. And if we look at the overall trajectory here, then really going all the way back to mid-2021, early 2021, the trend for the U.S. labor market has been toward weakening, albeit in a sort of very shallow way. Earlier today, we got a private sector estimate for jobs growth, and take this thing with a grain of salt. Very rarely does this actually foreshadow official government figures, but here too, we have a somewhat underwhelming result. 122,000 private sector jobs added, according to ADP, their estimate. That was lighter than the 140K expected, again, a somewhat soggier number. And on the flip side, we got jobless claims data today, a day earlier, because, of course, Thursday there is that closure. And here, the 4-week average on jobless claims fell to the lowest that we've seen since 2020. And that, of course, is not the kind of thing that tells us that the labor market is in any kind of serious tailspin or anything even closely resembling it. But whereas the ADP numbers and the ISM numbers are a little bit soft in their composition, the 4-week jobless claims view is much more supportive. On the whole, what we see here is that U.S. economic data, ISM numbers notwithstanding, has been cooling since mid-November. And where we are now on this index from Citigroup is, of course, a very interesting spot, and yet another one where we stand at the precipice of something. We'll see what. Because 0 on this index implies that U.S. economic data has been coming out relatively in line with forecasts. Not worse, not better, about on the nose. And that's after a period of cooling where we can see, obviously, there was some strong outperformance. And indeed, this outperformance is why the markets reckoned that the Fed was too dovish in September. By the time the Fed came out in September and gave us all of those rate cut expectations, that was this right here, the economy was already turning. And that's why the market took the Fed's aggressive messaging in September and did this, the opposite of what you might expect if you were taking the Fed at face value. Because the market said, no, you're not going to do all of what you're saying. It makes no sense. Here, we've seen this cool off, but we're basically at neutral now. And so the question really is, does this trajectory mark the end of what is a normalization back and a revision of forecasts to sort of line them up with where the economy actually is performing, or whether a larger cooling like this, recall the last time we came down from similar highs to here, we cracked lower. And of course, that story you again see very much reflected in the larger markets. So from mid-April, data is cooling relative to forecasts, and from mid-April, inflation expectations are coming down, yields are coming down, the dollar is coming down. So it's not certainly beyond us here to envision that another leg lower here follows, but of course the data has to comply, or we might bounce here, but again, of course, the data there too has to comply. If we get a number that's relatively in line with expectations on this jobs report, and that doesn't move the needle very much as far as monetary policy expectations are concerned, it seems like the markets might struggle for direction, and perhaps there is a bit of an upside bias on bonds and a downside bias on the dollar because, of course, both have had such extended moves already. But follow-through is going to need significant conviction, and that significant conviction is going to have to come from a basis of something. So the real risk here, seemingly, is that this sogginess in the context of data that's been cooling relative to forecasts gives us a disappointment. And that's where the fireworks come. If that's how this goes, and we get a softer jobs number, we get maybe even a rise in the unemployment rate, That's where maybe there is a big reversal in the bonds. Maybe there's a big reversal in the dollar, up in the bonds, down in the dollar against most of its major counterparts. And the question then is, do equities celebrate lower rates? Or do they begin to worry about the business cycle? And about the idea that if, in fact, everything looks overcooked, and the expectation is that it's overcooked because the U.S. economy was hotter, then labor market data tells you maybe it's not as hot as you thought, then maybe what we have is a concern cyclically that then hurts equities. On the surface, you might expect that the story might be positive initially if yields were to nudge lower, and as an initial reaction, that's probably right. But where things ultimately settle on Friday in the wake of this data may be very telling across the board for global financial markets. And of course, we'll be watching. This is Macro Money for today. As ever, we are here Monday through Thursday, except for this week, because of course we have a market holiday on Thursday. So this is our last show for the week. We're back to normal scheduling next week, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. On with Chris for Futures Power Hour Mondays and Fridays. On with Victor Jones for The Price of Truth on Tuesdays. Writing for the News and Insights portion of tastylive.com. And commenting at Ilya Spivak on the formerly Twitter machine and on Blue Sky. Thanks very much for joining. Happy trading.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, special guest, new to the show, Shelly Van.
Hello. Thank you so much for having me. It's great to meet the Tasty Nation. Is that
Absolutely. Yeah, Tasty Nation.
Tasty Nation? Awesome.
Give them a shout out.
Yeah, hello everyone. Shout out to the chat. We are streaming live on YouTube and X.
Yeah, Shelly, you are a new member of the Tasty Crypto team. First time on the show. Won't be the last time. I promise everyone that. We're excited to have you here. But when you first started here, after we went through the hiring process, et cetera, and by the way, yes, exactly, Lone Sophos, please, everyone in the chat, the few of you that are here, type something crazy in the chat. Say what's up to Shelly. We've also got to come up with, really quickly, a question of the day. So if you have a question, think about it for a second. But what I was going to say, when you first started, I did not realize that I hired a famous person.
Oh dear.
You are famous in some spaces in Web3, in the metaverse. I didn't, at the time, and this is my fault, I didn't realize everything that you had been building, what you'd been working on. So would love for you to give everybody some background, and then we'll talk about, where you're focused in this space, kind of the direction we're going in with Tasty Crypto. But yeah, maybe just to start off, tell everybody about yourself, kind of what you've been up to prior to joining Tasty Crypto.
Well, thank you, and that was very generous. I wouldn't call myself famous. However, I, for the last 3.5 years, was completely focused on building in the metaverse. And specifically, I was focused on Decentraland and other platforms like HyperFi. But my passion for music led me to creating a virtual venue, so a music venue, but virtual in Decentraland. And through that journey, oh my gosh, I produced over 1,000 live shows, which it's a lot.
It is.
It's a lot.
Over how many years? So how long are you doing this for?
October of 2021.
Okay.
The first show was on Halloween.
Wow.
So yeah, over 1,000.
Can anybody go and check this out today? Like,
Yep.
Is it still live?
Live in the sense that the building is there.
Okay, but if I wanted to go and see this, where would I go?
You would go to decentraland.org, download the client, and you can just run around as an avatar in there. It's like
Awesome.
building your digital identity.
Yeah, because I think that's the question that a lot of people have, certainly the question that I had, was how do you participate? Like, what is this metaverse? I get kind of the video game concept, and then there's clearly the virtual reality headset idea of the metaverse. But yeah, what is it really, and how do you access it, or how do you kind of describe it or define it?
So I think a lot of the platforms have a little bit of an identity crisis because they're trying too hard to be a game. And it's really more of a social experience on chain or just online. So right now we're on a form of social media, right? Like we're looking at a screen, YouTube chat is scrolling. It's very flat. It's a scroller. You go to Facebook, you scroll through a feed, Instagram. Platforms like Decentraland or HyperFi, it's like social media immersion. You can create your digital identity as an avatar. You do this usually with a wallet. So the Tasty Crypto wallet can be used to log into the platform or the game, if you want to call it a game. And from there, all of your experiences are essentially logged in the wallet if you're collecting NFTs throughout the journey, which is why it's so much fun to do this on chain. But back to the social side, when you go in, you're in this environment that is truly social, and it's not dictated by any sort of algorithm. You're running around, you're a real person. And during, lockdowns, during the pandemic, we saw such a massive need for human connection, and this is where it was just booming. Like, everybody was running around. My favorite question to ask during a live event was, "Where's everybody from?" And you'd get, Germany, Portugal, Brazil, New York, everybody from
the internet.
The internet. And so the internet in 3D.
Okay.
And a major misconception is that you need 3D goggles.
Yes, yeah. I've got to strap something onto my head in order to participate.
Nope, just a computer.
Okay.
And so if anybody's ever played, Minecraft.
Yeah, I was going to say it's a lot like Fortnite or Call of Duty, where people get together just to hang out with each other, but in this space.
Exactly.
Okay.
And so connecting over music, that's just the universal language of good vibes. So the language barrier, even if people didn't speak English in this case, you would just get a lot of like, love this, or emotes, throwing money, their avatar throwing money. And so, yeah, it was a lot of fun.
We need to build some sort of tasty world. I think there's a lot of opportunities, and clearly if people connect the dots, maybe we're going in that direction. But I've got the browser up here. If we want to throw this up, I've got HyperFi as one of the platforms. If we can just give everybody a quick peek at this. And I know this is not necessarily the portal to what you've built in your platform, but this is what powers it. Is that right?
Yes. So this...
Or I'm sorry, you were talking about Decentraland.
Decentraland, but
Yep.
we do have a couple of builds in here, and you could go to them. It's just the URL is hyperfi.io/true, TRU.
Okay, let's check a look.
And
TRU?
Yep.
Okay,
And
so
so-
this is your world here as
Correct.
it loads up. Okay, awesome. Yeah, I just wanted to showcase this because it was something that I kind of learned as you had started. You're here to help us with all things marketing, content, strategy, and clearly we're going to go further into the world of Web3. But just wanted to show everybody this is some of what you've been working on, and obviously you can go into this world here. But yeah, we've got some exciting things planned for sure, and excited to have you here, Shelly. And if you guys want to bounce off of this, you can pull the browser
see
back.
a question here about what about music licenses for a public performance? Excellent question. And a lot of Web3 in this sense has just been the Wild West, and people are like doing things until they're told otherwise. But for us specifically, we were doing original music only. So I've worked with hundreds of independent musicians from all over the globe to showcase their original work.
That is freaking awesome. Yes, Lone Sophos. Quick question from Grumpy Mike. How do you think about this? It sounds like kind of a blockchain-enabled version of the old Second Life. I think Sims, if people are familiar with that game, comes to mind. Is it a fair comparison?
Yeah.
Early days, though, for a lot of this?
Yeah. And I was like 10 years old, and I've been a very nerdy kid from the start, so I'll age myself here, but I was about 10 when I discovered Worlds Away, and it was like the first metaverse ever. I'm like, if anybody has played Worlds Away, please say something in chat, because I would be floored if anybody knows what I'm talking about. But it was a side-scrolling social environment where you could earn tokens and then pay rent to have an apartment that you could then decorate. And the tokens were earned by gameplay. So the longer you were in world, you'd be racking up this little token counter, and then it was like, ooh, you can buy extra things, like a fuzzy. I remember it was just like a ball of lint, but it rode around on your shoulder and it had a face. And I was like, I gotta get a fuzzy. And so, yeah, ridiculous. But here I am with my avatar walking around, side-scrolling, and if you were to chat with anybody, the chat would come up, at the top of the screen, and you could build relationships. And that was like my first engagement with community online, if you will. And so then it was gone. I don't actually remember what happened to it. But so when I discovered Decentraland, it was like, oh,
I know how this works.
Oh, yeah, this is awesome. And being from the social media world prior, it was so refreshing to have a real human connection. Because again, with algorithms kind of filtering what you see and what you post, you don't have that in this environment.
Well, you're starting to get a lot of questions here, which is fantastic. We are engaged. I'm interested. Let's break this down a bit more. And clearly, we got to jump into the trading side of things. Some questions now around like, okay, participation. Clearly, some people see that this is the direction it's going in. It's going to ebb and flow. But when you look at the different, we'll call them investment opportunities, or how do you think about participating in the space? You know, a couple good questions here already. Let's just jump with the drifting gamer. Why Decentraland over the sandbox? And then I would even expand on that. Like, okay, I think this is the direction we're going in. How do I trade this? How do I participate?
Yeah, excellent question. So we chose Decentraland mainly because it's an open world where if you enter, you can just run freely around. And then people buy parcels of land that are NFTs. And so let's just say I have land here and I have the NFT for this. I can build on whatever amount of land I own. And then the neighbor, who's another human on somewhere on planet Earth, can build here. And I can just boop, run next door.
Okay.
Run across the street. Open world. Somewhere like the sandbox, it's compartmentalized in that it's almost like you go to a website, you experience this 3D environment, but then if you want to go somewhere else, you have to leave and then go somewhere else. So it's just a disconnected experience. With the open world does come a lot of limitations, like gaming or computing power. You can't access Decentraland without a decent graphics card because it's trying to render all of these neighboring parcels. So it's a lot of pull on your device.
Okay.
So there's give and take.
Do you think that's the biggest thing that holds it back right now in terms of where you reach that mass adoption, kind of escape velocity? Is it at a point in the future where the hardware can support this, or is it just that you have a lack of awareness, or kind of maybe the technology isn't there in that sense yet? Like, what's kind of holding it back, in your opinion?
The barrier to entry is just too high. And because it is on chain, they've done a lot to reduce that barrier. Like, you don't have to log in with a wallet anymore. You can log in with a Gmail or something. If you're going to go in it for earning potential, I would say go in with a wallet. Like, if you're going to collect NFTs or build a wearable.
Yeah, so what do you mean by earning potential? How do you make money just by participating?
So I have to be careful with that word earning.
Okay.
Because you
but like clearly you can gain from this.
Yes,
there's some monetary benefit.
Absolutely. And you can collect wearables and then resell them. When you connect your wallet, it's just like logging in with an email, but it's a wallet. So when you're running around, you're leaving this footprint of like, this wallet address was on this parcel, or you clicked this wearable dispenser, you click the button, claim.
Signed a transaction as a result, sort of thing? Okay.
Automatically on the background, and then you're delivered an NFT, which in this case is a wearable, an emote, something that you can then resell on the secondary market, or just collect and hold like I have, thousands as I've...
You've been busy.
Yeah.
I love this idea. I mean, as you're describing this, and I know we've had some of these conversations off air, but I'm thinking I've got the Tom Beret out of the dispenser. My avatar is wearing that. I'm trading in this world with other people. I'm talking trade ideas. It's a lot of it. I think it's easy to see the potential here, just given like we're kind of in, I suppose, this metaverse-esque environment right now where you and I are broadcasting this on the internet. We're on YouTube, but you can go to YouTube, you can engage with us. So we're kind of all in the same space at the same time, clearly communicating through some barrier. This removes some of those barriers, but I think you can clearly see that this works in that sense. And so when you go forward into the metaverse, if this is something that continues to grow, and again, I think will, I think every brand will be there. Maybe that is the next version of how you interact with what we call the World Wide Web, or through internet web browsers today.
Oh yeah, and as the tech increases, imagine like you're clothes shopping and you have a hologram of yourself, and it's like, ooh, I'm going to try this on. Or, I mean, Samsung did have a really cool experience in Decentraland. We've had some awesome brands. I see Rustan in chat. Hello. And MetaTiger. My sister's here, Jen.
Awesome.
And Rustan said, as a creator, I can bring my Snoop Dogg voxel car into Decentraland, but I can't take my Decentraland non-voxel asset into Sandbox. So there are, different limitations per.
Not necessarily interoperable. Everybody loves to use that term.
That is a big word.
Okay.
And the really cool part about Decentraland is if you can develop a wearable in Decentraland, it's not locked to a full skin. You have different slots. So I can change my hair, I can change my eye shape, I can change my shirt, my hat. There's all the different slots. So I can really customize my digital identity. And then from within there, click one button and create a VRM, which is just a different file type, but it makes it a whole, like me as a whole. And then I can use that VRM in other metaverse platforms. So Decentraland is kind of a base for interoperability when it comes to your digital identity if you want to start there and then bring that persona elsewhere.
It sounds like, and I don't mean to put words in your mouth, but it sounds like Decentraland is a trade then. Is that where the majority of this activity occurs? If I want to participate, I want to own land. Am I buying land on Decentraland, in Decentraland in terms of those NFTs? Am I buying the token? Is there a token?
Yes.
First of all, okay.
Mana.
Is that the trade? Or based on what you said, now that this whole space is kind of growing, there's these other worlds, other platforms. Is there some sort of relative value kind of trade there, idea where, yes, this was good for a while in Decentraland, but this other thing is growing, or this is interesting to me? Like, how do you think about it as we move forward?
Hyperfi is the big one that is mobile friendly, VR friendly, browser friendly.
And that was what we showed earlier, right in the browser, where you
Yes.
can just jump right into it, boom, it's there.
And it's
No headset.
no headset. Although if the build itself is optimized correctly, incredible experience on a headset.
So you want the headset? Okay.
Want the headset.
All right.
But the point with Hyperfi is it's accessible everywhere. And it's, as a builder, very easy. It's drag and drop, which I guess if we were to have, and you know what? I'm going to pull Rustan's analogy. He said it's like the WordPress of the metaverse. So if you're a blogger, you know that WordPress is a content management system that allows a non-coder to develop content for a website. I can create a blog post. I can drag in an image without having to code it in its position. I can hit center align and it'll do it instead of typing the HTML to make it centered. This is what Hyperfi did. There's all these modules and tools in there. It's like, okay, I have my 3D file.
Okay.
Instead of having to code and position it in this very dimensional space, it's just drag, drop, which is mind-bogglingly like ahead of the curve in terms of metaverse building.
Makes it a lot easier then for anybody to build these, I'll call them worlds. I don't know if that's the appropriate term, but okay. So it makes it a lot easier for any brand, any business, any individual to do this versus maybe what was involved early on. You've got to have a certain skill set, I'm guessing.
Absolutely.
Okay. Interesting. Some questions for you, because I do follow this to some extent. I don't mean to play dumb on the show. I mean, I've heard of Decentraland, we'll put it there. I'm not super familiar with the inner workings, but a lot of what I've seen, because we've been trading, and if you follow Bag Battles, which before we wrap up the show, we've got to get Shelly's trade. She's aping in, as they like to say. But, if you've been following Bag Battles, we have started to become more focused or interested in some of these AI agents. And the next theme, I suppose, or the narrative that's unfolding in the marketplace is these AI agents possibly kind of participating and living in these, in a more tangible sense, in these worlds where you would interact with them beyond how a lot of people interact with them today, which is primarily on X. How do you think about that? Is that a catalyst for this? Do you think if this is where some of these agents are and you interact with them there, do you think that naturally pulls more people into the space? Is that a good thing for it? Or are you going to have a world that, like Twitter, there's a lot of spam and it's populated with these like little autonomous agents running around? They're all the same model and doing the same thing, and it pushes people away.
Yeah, I think I'm so bullish on innovation that my optimism leans towards this is also exciting, but I am aware that like, oh, this is also maybe scary. Are we building a future where we are human batteries, you know, the Matrix? But in somewhere like HyperFi, and let's say you're a brand and you want to build an immersive gamified experience, you can have theoretically an AI agent that's like your brand ambassador, and it's learning to engage with your target audience in a game, in this like, you know, really immersive experience that's totally unique to the user.
To you specifically as the user, not just to that brand.
And meet Tasty AI bot and just like chat, and it'll be completely unique to me in this gamified experience and world. And so, and then we're so early with AI agents. I mean, like really, really early, that I think that the future of this is like communities of AI agents engaging with each other to even get smarter and potentially more powerful, which is where it can get like, But this is what HyperFi just did. They created an integration with an AI bot, or with AI bots, so that, you know, people like me and you can start playing with that and experimenting and seeing what they can do and how they can learn. So
yeah, it's an interesting concept. A lot of people call these agents non-playable characters if you think about a video game. But if you take that a step further, where it does have a degree of intelligence that isn't necessarily directly programmed into the game, as a lot of the non-playable characters are today. And then on top of that, you can interact with this thing. And if it does provide some service of value, there is, you know, an economy that exists in this world. And you would pay, I suppose, you know, some sort of, you'd use cryptocurrency to interact with this thing. That becomes interesting. You know, I think it's still very, very early, but the speed at which some of this is moving, and, you know, what we're now talking about versus what we were talking about 2-3 weeks ago that didn't exist 2 months ago, it's crazy how quickly it's moving.
it's like, how do you sleep? You wake up and you're like, oh.
Crypto never sleeps, Shelly. That's what they say. That's why we're exhausted.
Extra lines, extra whites. Yep.
Right. But yeah, I think it's, look, we're going to continue to keep an eye on this. We're super excited that you're here, whether we ultimately build for Tasty Nation in these worlds or not. I'm happy that you're on the team, and we're going to be doing a lot more, you know, call it crypto native things and participating in that space. Before we wrap things up though, I've got to get your trade idea for bag battles. I mean, I think we've already put it on. So we have the trade on. I guess more so, let's talk about it. We can pull up the wallet app here.
Well, and
what do you got for us?
I can say I have nothing intelligent to say about this decision because this token was launched this morning, I think. So there's like no info to find. We are aping in truly to a brand new token that mooned like within the first few hours of its birth. So my mom, what is FUD? What is a FUD? Fear, fear, uncertainty, and doubt.
Oh, your mom's in the chat?
My mom is in the chat.
Hell yeah. What's up, Mom? I can't seem to find it on here. But that said, if you want to talk to us, yeah, what is the...
So LLM on Solana, be wary because...
It's only been out for like a couple hours. But this is bag battles we're talking about here.
It's not the only ticker either. You have to pay attention to contract addresses. So we can share somewhere. But yeah, LLM...
That's your trade.
Language model is what that stands for. Which in AI terms, that's the LLM models are what we're using typically when you talk about AI agents. But yeah, we'll see what happens.
Well, we've got 100 USDC in that on Solana. I'm not sure why I don't have it loaded up here, or maybe I've got to enter in the token so that it will display. All that said, let's take a quick look at where everybody else is at before we wrap things up. I didn't get a chance to talk with the guys. I haven't seen anything but red on the screen over the last couple of days, so we're all down. Katie is down the least, but she put her trade on more recently, just before you. Harry Potter, Obama, Sonic, Inu, she's down about 6%. Just a chill guy is Mike. He's down about 20%. Nick's down about 30%. I was down as well. I added another token that's not on here, but we can change that. I'm in jail. We're all down. The token is jailbreak me. We're all down, but hopefully we see a little bit of a reversal here. We've got LLM like within hours after launching. So I don't know if that's a good thing or a bad thing. We'll see.
Yep.
Yeah.
I have to turn myself into an ape.
Yeah, we need your, I suppose, kind of your avatar at least for bag battles. Mm-hmm. So we've got a bit of, I guess, a competition going now. We've got 5 people in it. We might have to open this up to the chat at some point, get everyone's suggestions. It's certainly not recommendations. We don't even know what some of these tokens are. We're just having fun.
Yeah. Not financial advice. DYOR, NFA. Do your own research. Always.
Cool. Well, Shelly, thank you for coming on. Like I said, the first time, but not the last time that you're going to see Shelly. She'll be a regular part of the show. We've got a lot of other content that we're working on, so we'll share more details soon. But as you can probably guess, more shows coming, more times directly on the Tasty Crypto Network. I think very soon you'll probably have your own show and I'll be able to get out of here. That said, looking forward to it, Shelly. And yes, again, everyone stay tuned. We will be back on Monday again with Katie, and Shelly will be back with me on Wednesday next week, and we'll be launching some more content as I alluded to. So we'll bring you some more details around that as well. But again, thank you, Shelly, for coming on the show. That's going to do it for this episode. Until then, I'm Ryan.
I'm Shelly.
Peace.
Thank you.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
No.
My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust...
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
5, 4, 3.
Oh, yeah. It is 5 o'clock somewhere, Wednesday, January 8th, 2025. Can you believe it, my babies? It is so. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile application. But if you want to be part of this hot, I was going to say hot dumpster fire of a conversation, head on over to the YouTube channel and jump in the chat. The water is fine. It is Wednesday. No, it isn't. What day is it?
Yes, it is. Still Wednesday. Well, Thursday for you, Wednesday for us.
All right. It's Wednesday, and that means we're pulling a switcheroo in 2025. So we have our good friend Chris Vecchio with us. Chris, how you doing, my friend? Happy New Year.
Excited for Wacky Wednesdays, and it is after January 7th, which according to Larry David means you are not allowed to say Happy New Year. So please.
Oh, is that the rule? Is that the rule?
It's the Larry David rule, which means,
It's a good one.
There's probably a good rule.
I like most of his rules.
Yeah. The difference is you and I aren't worth $1 billion, so we can't get away with being insufferable jerks to everyone around us. But it's still a good rule.
$1 billion. How do you know I'm not worth $1 billion? Why would you?
Well, you're worth. Last time I checked, you told me you're worth $2 billion. So unless you lost half your money, I would assume.
Both of those things are wrong. I would never tell anybody how much I'm worth. I don't even think my wife knows that.
I was joking with some of the. I went out to drinks last week with some of the other dads at my kid's school just to get to know. We're gonna know each other for 15 years.
First of all,
no, great. No,
already sounds like hell.
Private,
and you would
no.
Finance goes out with
finance guys, private equity guys. Totally,
you've got even
totally great time. That's a great day. Got even
worse.
I know that you don't like people, Victor, but I told them, listen, when you see me driving around town in a 2004 Honda Civic, you'll know that I've really hit it big because I'm going to go the exact opposite direction with my car as things get better.
Mm-hmm. Yeah, I just had to get a little taste. And then I was like, you know what? All this stuff is stupid. Where's the 100% organic cotton? That's what my life is now, Chris. Just trying to find 100% organic cotton. Do you know how hard it is to find it? Or linen that doesn't have polyester blend in it?
You keep texting me about 1,800 thread count sheets, and it's I can't tell the difference between 1,800 and 1,600, but you do you.
Somehow that's the cold open. What's up, everybody? Hit the like button on your way in the door. This is it's going to be a fun one. First one in 2025. Chris, I'm going to ask you an open-ended question. I'm not going to ask you about minutes. I'm not going to ask you about data. I'm not going to even ask you about price action or quantum computing. I'm not going to ask you about invading Greenland or the United States of America plus Canada. Chris, I just want to ask you, since I haven't talked to you in a while, give me your sort of high-level point of view on how you think about all of risk in 2025. I'm going to start at that level, and then we're going to work our way down into individual themes and storylines for the year.
It feels a bit like July of last year, where the markets are kind of looking for the next object of speculation, as your typical Wednesday guest might say. In this case, we are pressing into the reality of 5% bond yields at the long end of the curve again, which has been.
Now everybody wants to talk about yields. Now everybody wants to talk about yields.
We've had a lot of bad bond auctions to start the year, right? Today's 30-year was actually probably the best one that we've had year to date so far. But the auctions thus far haven't been good. And we're seeing that inflation expectations are continuing to rise. The prices paid subcomponent of the ISM survey this week was obviously one of the highest readings that we've seen in, I think, since August 2007. So that raised some alarm bells. But that kind of leaves the Fed facing two situations. Either they stop cutting because inflation is back, or they have to cut, which means inflation is being subsumed by something else, a recession. And the stock chart patterns themselves, as we wind into this now, finishing this first week of the year, the S&P looks like a head and shoulders coming together. The NASDAQ, not necessarily a head and shoulders, but certainly a chart that appears to be rolling down. You're even seeing some weakness in the crypto space, which has been high flying over the past 6 to 8 weeks. So risk looks tentative at best right now. We're trying to figure out, why is the Fed slowing down its rate cut cycle? And this is the constant battle. Are we slowing down the rate cut cycle because inflation's back, or because the economy is so much stronger than we anticipated, and that excess growth that we didn't expect to be here, it substantiates or compensates us for that additional higher interest rate? We have some time to churn. January, February, March tend to be a garbage time for equity markets. Not that it's bad, it's just frustrating sideways chop. Past 10 and 20 years, the market's effectively flat through the Ides of March. So it's hard to be too excited about things right now when stocks look kind of toppy, even if the top hasn't been triggered yet.
So let me ask you, how does a person like you, how do you play in a world where you might expect your base case is sideways action for the next 3 months, where your base case is it's hard to get excited about additional upside, where your base case is, as you used an Ilya-ism earlier today, that the market's sort of looking for a new speculative pocket to bring it higher, right? It was supposed to be quantum computing, but a little bit of cold water thrown on that yesterday. More on that later. So how does a person like you play that? What do you do? Does that mean Chris is reducing his exposure? Does that mean Chris is adding some short deltas to certain pockets of the marketplace? Or does that mean you grit your teeth and you say, thank you, sir, may I have another to the marketplace, but you continue to hold long deltas? How does Chris Vecchio play this next 3 months?
What's that Matthew Broderick movie, War Games, right?
I don't know.
So the only way to win is not to play. This is a chop fest. I'm a directional guy, Victor. I like trading momentum. And so when you have a market that's grinding sideways, stochastics are, not overbought or oversold. I like trending markets when stochastics are overbought or oversold persistently, and they're not right now. So this is a place where I'm not looking really at stock indexes at the moment. The trades that I placed this week are long copper and long natural gas. And that's really the only end of the pool I'm playing in right now. The other thing that I'm, considering is how to get some long exposure in the yen, only because dollar yen spot rates are beginning to creep back up to the place where they were in the summer months that beget some BOJ intervention talk. And moreover, if the Fed isn't going to be cutting rates as much as other central banks expected them to at the onset of the year, that puts other central banks in a difficult position, particularly the BOJ. If they had gone into 2025 operating under the assumption that the Fed cuts 2 to 3 times and therefore the BOJ only needs to hike once, well, to sustain that same interest rate differential, if the Fed's only cutting once or twice now, maybe the BOJ needs to do more. And if they don't do more, then they're going to invite more speculative pain on the yen. I think that the yen becomes a place where people want to look perhaps at some out-of-the-money opportunities. 007 in the 6J, not necessarily H5, maybe going out to the M5 contract. Those calls are still pretty cheap, all things considered. I know it's going to take a reversal or retrenchment in treasury yields or some sort of, outlier risk to trigger a big move in the yen. But I'm also reminded of what happened at the start of Trump's first term. He came out very strongly against the too strong U.S. dollar at the time, and for the rest of 2017, the greenback was on a path where it was ultimately weakening. And I could easily see him complaining about that here, right? Like our exporters are having a hard time because the dollar is too strong, and that becomes a psychological hurdle for the market moving forward. But either way, though, it's really the yen that I'm looking at right now because of these policy extremes. We're getting recession or we're getting no more cuts, but finding that middle path right now seems a little bit more difficult given what bonds are saying.
So much good stuff. So many interesting threads to pull on there. Let me go. Let me go with the Trump policy thing real quick with the dollar and versus yields, because I'm sort of curious with this contradiction that I see, and I've also heard others comment on.
Sure.
The contradiction is the trade policies seem to be strong dollar policies.
Mm-hmm.
Yet it seems like Trump prefers or talks about wanting a weaker dollar and wanting lower interest rates. He's saying interest rates are high. I don't think you can answer this, but I more or less I'm just putting it to you. Do you see a contradiction in the way that the new administration talks about the dollar and yields versus the trade policy? And do you think one of those two things has to win out, or is that the whole point, to try to have these offsetting balances, that the trade policy is going to be strong dollar and somehow, I don't know, fiscal policy or monetary policy becomes this sort of this like weak dollar policy and maybe they balance it? I just don't understand. What they're saying to me is contradictory. I crazy?
It is. No, it makes no sense. It's contradictory. As I've been told by people who've recently purchased blue check marks on Twitter, that I don't understand, Trump's 40 chess. So I'll leave it to the market to sort it out. But quite frankly, it's that contradiction that's going to provide us a lot of the opportunity. We can sit here and pull our hair out and say, like, that's not consistent with anything I've ever read from like Murray Rothbard or John Maynard Keynes or anyone in between, right? It's not a Paul Krugman thing, or, it's not the invisible hand of the market. It's not Adam Smith. It's not. It doesn't make any sense. That's not how it works out. China tries to do this all the time, right? There's the trifecta or the triumvirate when it comes to FX markets. If you want to have open trade and a free floating currency and open capital, like, you have to have all three. You can't have just pick and choose a la carte if you want to have an open financial system. So sure, we want a weak dollar because it will make our goods more appealing to foreigners, fine. But if we do that plus tariffs, then the dollar can go down. But if you're raising the cost of those goods for foreigners, then they kind of offset so that overall demand doesn't change. And now you're making it more expensive for Americans to buy goods from abroad. So does that help inflation? Probably not. And I distinctly remember, solving inflation was a campaign promise. Egg prices are going down, heating bills are going down, right? So I don't know how it works out, but you're going to get that contradiction, and that contradiction is what's going to breed the opportunities in the next year, because he's going to say he wants one thing and the market's going to move towards it and go, okay, well, you want to do tariffs? We'll give you tariffs, but higher structural inflation, stronger dollar, right? Higher yields. Oh, no, you don't want higher yields? Well, then you better figure that tariff stuff out, because there's no way that you can have both.
Yeah, I agree 100%. Let me ask you, Catan in the chat, shout out to Catan, shout out to everybody in the chat, actually. Is asking, is everyone at Tasty long bonds?
No.
And this is so I'm going to bring up this. This has been a brutal trade for me, and it has not worked. There was a brief point in time when I was looking for a 3-point rally. We got a 3-point rally, and I just didn't pitch it, and I've continued to add to it. I generally thought we were going to 5% in the 10-year anyway. I thought that was an inevitability in 2025. I just didn't think we'd go straight there. And I think the trend in yields, the trend in the 10-year over the last 14 months, to me has been really, really surprising. Like, there's no two-way action. We just go straight there. So if I had to pick a direction right now, because I don't love shorting the whole, I bet that we would go long. I would go long, the 10-year, or go long bonds. And I kind of like going long the 2-year note as well. But I think we will see higher yields in 2025. I wouldn't want to go short here. So how do you think about yields across the curve? 10, 2, and then 30 if you want to throw that on there as well.
Well, we have to consider how Treasury term premia is evolving in this marketplace. And if we want to just go with the Federal Reserve Bank of New York's model, they have a Treasury term premia model that they produce. It's updated on their website. The term premium right now is 0.169, which doesn't seem like a lot. This is on the 10-year yield. But you go back to where we were in 2020, for example, and the term premium was negative 1.235%. So we've gone over the course of several years shifting from increasingly negative or declining or moving into negative territory for the term premium throughout the 2010s. We're now in the 2020s. It's been creeping back up slowly over time. Now, when we think about the long-term yield, how do you get to a long-term yield? Well, there's expectations for short-term interest rates. You're looking at growth and inflation expectations, and of course, that term premia. We can break all those things down, right? We can kind of pull them apart and segregate them and work backwards to fill in any blanks. We know where interest rates are going because of the Fed, so we can pull that out. We have expectations for growth in recent weeks, which is to say that growth expectations have come in. Fourth quarter estimate is from 3.4% to 2.7% right now. Inflation expectations really haven't gone anywhere. If you look at the Cleveland Fed's tracker, it looks like we've peaked out in December, January, as one might surmise seasonally, and we're getting to roll back over. So then what else is there? It would have to be the term premium. And we know that. We can see that the term premium has gone up. So why would the term premium go up? Because the path forward for interest rates is wide open in a world with tariffs. What if we do tariffs and no one retaliates? What does that do for our growth, productivity, the cost of goods coming to this country? What if people retaliate and go overboard? They go, you know what, America, you want to put a 10% tariff on us? We're not going to be bullied for the next 4 years. We're going to put a 50% tariff on your stuff. And that's that. There is a wide range of impacts. So in terms of scenario analyses, you have to just blow it wide open to a certain extent. And I think that's really, really weighing down the Treasury market right now. And I think the fact that the Treasury market is positioned where it is says all you need to know about the legitimacy and efficacy of the Doge Commission. If we were really thinking that we were going to have these draconian spending cuts down the pipeline to cause the unfortunate bit of pain, in Elon Musk's words, that the hardship, a direct quote, that we would all need to bear in order to get the economy reoriented and to become longer term more productive, bonds would be pricing in a degree of deflation, right? They wouldn't be pricing in higher rates. You wouldn't be looking at a 5% 10-year yield potentially right around the corner. So I don't know where this ends. I'm looking for an exhaustion signal. My favorite exhaustion signal in recent years, because of the evolution of the futures market, has been when the weekly volume in ZB has exceeded 3 million contracts traded in back-to-back weeks. We got that for the first time in late February, early March 2020. We got that for the second time in October 2023. Obviously, the first instance marked the top in ZB. The second instance marked a near-term bottom. Throughout this decline, we have not seen those type of exhaustive volume figures yet. So in terms of picking a bottom here and trying to get the long end of the curve, it is very much like catching a falling knife right now. The only way I can substantiate long bonds is there is this pandemic portfolio I'm putting together, Victor, which I know you'll hate. But a pandemic portfolio of long yen, long ZB, long Novavax, long Pfizer, long J&J, basically all the companies think that if I'm playing for a pandemic right now, there's something that you wouldn't necessarily think is realistic. But I look at some of the companies, we'll go with that into a separate discussion point here. But I have a bond position that I would like to put on, but it's only consistent with there being recession or incompetence in terms of handling a major health crisis. And I just don't see that happening today. So I'm not playing in that end of the pool at all.
Oh, wow. Again, a great response. Okay, so the pandemic portfolio, I have no issues with at all, regardless of the probabilities of it hitting. The point is, a lot of those healthcare stocks, I talked about that being one of my preferred themes going into the year because.
Oh, really? Okay.
Yeah, because they were so cheap.
Yeah.
It's not even, and I just mean on price, not necessarily on value. But if, to your point, we get a growth slowdown, where do people go? They go to low beta, and then they go to defensive sectors. And then you also have this sort of automation overlay that's happening within healthcare right now. So no, I don't think that's a bad play at all. Plus, you put in long bonds there, and bonds are just getting creamed. And on a slowdown of growth, you could have a rush to that type of collateral. So I think all of those things, regardless if you get the catalyst to hit of, some sort of health crisis, I think you're getting value in all of those instruments you just mentioned, regardless.
Yeah, so I have a screen that I run. It's all the stocks that did triple-digit growth in January and February 2020. And some of those names like Novavax, like KVAL, like IBIO, I have a few other names like ZCWD. They've all like doubled in the past 3 weeks. And we know that H5N1 just claimed its first life here in America a few days ago in Louisiana. And I'm seeing all these people posting things on Facebook of being like, my little chick won't stop wheezing, and they're holding it close to their face. They're like, can you hear the wheezing? It's like, oh gosh, that person's dead. That sucks. Bird flu transmission for the most recent update was up 161% for the month of December. And I think about the public response last time and how there's so much reticence and antipathy towards a coordinated public health response. Trump going back in the office obviously is going to be more against, 2 weeks to slow the spread if it were to happen. So I don't know. I think having some high convexity, like what if the moves in the market that are happening right now Why is it mirroring what happened in January and February 2020 in certain pockets? I can't ignore it. But then there's also like, I don't want to say, this is also like people shouldn't follow me into this. I actually really am flying blind here. This is kind of just on intuition. You and I have discussed a number of times. I was very fortunate that in January 2020, when COVID comes to the US, my kid is born, and I happen to close out my book. And so the big market decline that year, I am on the sidelines for. I don't start trading again until early April. And by that point, the market's already had its huge correction and the Fed's come in to throw liquidity at everyone. And so my instinct was like, I don't have any fear. I didn't just have the psychological terror watching the markets crash for the past few weeks. I'm just going to go all in because they're doing QE and this is easy for me to do. I didn't get hurt. But this time around, like I'm trying to kind of skate to where the puck may be. So I have this small basket of items that in case things hit the fan and there's no public response quick enough, hopefully, that's a hedge. It's a hedge for what I have.
I don't hate that at all. And the funny thing is, we talked about this coming into the year, and like this last week and a half or something, all these stocks have been on fire on a percentage basis. So then the second thing I want to talk about from your last response, because there was so much meat in there, was the bond. So your thoughts on bonds here. So one, I would say you keep bringing up the Doge Commission, and I just, for some reason, to me, I think it's misplaced, but you tell me why you may think I'm wrong in countering your point on this. The main thing is that when those guys said they were going to find $2 trillion in the budget, everybody, I go, that's a BHAG, right? That's a number prior to the election that they're throwing out there. It's probably unrealistic, and that's how politics work. So they're not going to find $2 trillion in the budget, and whatever they do find, they are not responsible. At least right now, the mandate was they cannot go cut Medicare, Medicaid, Social Security. They can't touch that stuff. They're responsible for finding money in the budget that is coming from sort of wasteful spending, researching pelicans and their responses to, whether they like Pepsi or Coca-Cola better, like that type of stuff, or inefficiencies. And so I don't think the bond market is going to care about that stuff to the extent that I think you talk about sometimes, because that's not the mandate. Their mandate wasn't to go in there and cut the bulk of our spending, and we all know where that spending comes from. It's from everything else. And so do you think that's a fair sort of counterpoint to that, or would you see it a different way?
I see it a different way insofar as I think maybe I'm a romantic. I think that the politicians, when they run on something, should intend on following through in it. So if
you and I both, brother,
right? They say like, hey, we're gonna cut $2 trillion from spending. Like, I'm very pragmatic. Good luck. Having worked in politics, good luck. It sounds like a great campaign promise, but also that's why people are so frustrated with our politics, because we have people out there lying to us and telling us what we want to hear, and they are really do nothing Democrats and do nothing Republicans, and we don't operate on a basis of deliverism anymore. And so, yeah, it bothers. That's why I'm so worked up about this. Yeah, okay, great. Getting our federal finances in order would be fantastic. The manner with which we've been promised that it will happen will not work. And more importantly, then, it means all the people who believed and supported these people for these policies will be even more frustrated that nothing's getting done. And I want a healthy civic body. So I don't think that we should be waving bells in people's faces saying this is going to solve the problem. And then in reality, like, what are we doing right now? We're doing a reconciliation bill. I remember distinctly, Mr. Jones, 3 weeks ago when we were trying to get the continuing resolution passed, everyone was saying, why does this all need to be in one bill? If it's such a good piece of legislation, pull it out, pass it separately. And Trump's here saying we should do everything in one bill for reconciliation. So forgive me if I'm feeling a little bit cheeky about all this. It's all just a bunch of bullshit. And nothing is going to change, and the deficits aren't going away. And the only thing that determines whether or not the economy stays on its path is, realistically, if we decide to shoot ourselves in the own foot and tear down the system as it's currently constructed, which, granted, isn't working for a lot of people, and we can fix those things with the system. But enacting tariffs for the sake of just saying we did so isn't going to solve inflation. It's not going to put more money in people's pockets. I guess it's just another game of 4D chess that I missed in between my, again, from Murray Rothbard to John Maynard Keynes. I've read it all, and I guess we'll let the market teach me this lesson, Victor.
No, I think you're 100% right. I don't disagree with anything you said. And I even said on this show, I don't know if it's a conversation with you or it's a solo show, but I said I thought maybe they'll find – I do think something will change. I think it's a bridge too far to say nothing's going to change. I do think things are going to change. I think other things will stay the same. I do think they'll find, like, if I had to guess, $500 million to like $800 million in the budget at best case scenario. I would
billion.
What did I say? Million.
It's like Dr. Evil, like $500 million. Like, well, it's a $36 trillion deficit. It's like it's kind of a big deal.
No, well, technically it's the annual budget, but
you're right. It's $1 billion, so $500 billion to $800 billion.
And I think they'll find something like that. But to me, it was. I've never been a fan of Lutnick, and so when he was on stage in Madison Square Garden and he posed that question to Elon, how much do you think we could find? I was like, that's a dumb question because nobody's asking you that. It's like it was like you don't have to give
a goal if nobody's asking for the goal. And then when Elon said $2 trillion, I go, you guys are idiots. You guys are idiots. That's a stupid number. You can't do that because it's kind of like what the Fed is doing. We all know the predicament that the Fed is in. If you actually want to get us back down to 2% and you wanted to do that inside of a few years, you're going to cause a deep, painful global recession given the debt profile of our economy and the world economy. So we know you're lying. It's just we don't know when you're going to expose the lie, which was the whole game we played in 2022. And the game we're playing right now on the fiscal side is the exact same thing, which is, okay, you can balance the budget in a year, but you're going to have a ton of pain if you want to try to do something like that. And then to offset that pain, if you want to ignore the people, which you're probably not going to, because if you ignore the people, you're not going to get reelected. So you've got to then respond back to the people with new social programs for the pain you yourself have caused. And nobody wants to do that. So the truth is that the fiscal budget is just as delicate as the monetary policy fiasco we've got ourselves into. And both sides are going to be juggling a very difficult scenario. And making these grand promises are stupid, but at least the Federal Reserve doesn't need to get elected, and they can be a little bit more coy with the way that they're making their promises on the monetary policy side. All right, I'll get off my soapbox here. Sorry about that.
No, it's a good one because I got a tweet from one of our listeners recently, Peter Windsor, and he said it was in response to a New York Post article about Elon Musk announcing the algorithm tweak to tamp down on the negativity on X. And Peter wrote, the conversation has changed again from the top. Liberals and blue sky aside, perhaps the free speech fair convo talk was just that and more useful tool than ideal.
All right,
like that's
took me into this. I wasn't going to go politics until the end. You know the format.
Yes, you were. Come on. You were texting me all those things from the Donald and 4chan and Blue Sky and Kamala's Beehive.
I've gone radio silent for the last couple of weeks. You know that's not true. So, but now that we're here, let's do it. Let's do it because for all the positive things I've said about Elon.
What's your X positivity score?
Oh, bro, I'm negative. I'm negative.
I'm a 60. Yeah.
I'm just kidding. So give me your thoughts on the H-1B. Let's go everything. Let's try to get canceled. Let's go scorched earth. Give me what's your thoughts on Elon Musk's H-1B take, and what are your thoughts on his sort of social credit score, bringing it to X?
P.T. Barnum is doing a great job with the bait and switch as usual. I think it's hilarious that after whipping up Twitter X into a fervor for the past 6 to 9 months, he decides now that it's too negative after people start going after him for apparently his hypocrisy on the immigration issue, which, having watched it play out in real time, listening to the space as it went, for those that are unaware, it was basically something like people saying to Elon, well, we got to stop immigration because these people are taking our jobs. And Elon says, well, they're not really taking your jobs. These are H-1B visas, which are for, tech workers and people who have more skills than the Americans that we have currently live in the country. And so then the people respond, okay, Elon, so then give us the education and the training that we need so we can fill those jobs. So you don't need to bring in the H-1B visas. And Elon and Vivek basically go, no, you people are too stupid. You're too stupid to have those skills anyway, so don't even worry about it. Immigration's actually really good because you guys are too dumb to fill the jobs. You won't ever get the skills or knowledge you have. And now we need to be more positive on X. I mean, Victor, come on. Come on. This guy's worth $400 billion. He's playing everyone like a fiddle. He's the most successful person in human history, has the president's under his thumb. My goodness, as someone who plays Civilization and Risk, he's kind of speedrunning it all. Good for him in a very twisted, dark sense. Are you shocked? Come on. This is the game. And he's playing it better than everyone, and he's playing everyone for it. So no, don't be surprised that the rules for him and not for everyone else. This is what he does. And that's why he's worth $400 billion, because everything is up for sale. His morals, his principles, they will change when it can put $1 in his pocket.
It's a nice narrative, and it will sell some papers. The reality is that I don't think Elon's position on H-1B visas has ever shifted or changed. I think the conversation never came up. I do think as soon as he took the position, in my personal opinion, I thought this is what a business person does and not what a politician would do. A politician would need to deliver value and would probably not, into a movement which is more nationalistic, which is more populist. The idea that you would start, the idea that his idea or his position would play, you had to know that was a low probability. I don't know. His personality is so wild that I don't know that he knew that wasn't going to play. I don't know that he knew that was going to be such a big deal in the eyes of X and all of the supporters around Trump. I don't know that he knew it was going to fracture it, even though I think it should have been blatantly obvious. But
Victor, do you know how much it costs to run a congressional campaign in the United States? About $1.5 million, all in. Okay, like a state assembly race here in New York, like House of Representatives is probably going to run you $100K. A state Senate race is probably going to run you $500K. You go to Congress, it's depending where you are, $1 million, $1.5 million. Elon Musk with $270 million of super PAC donations just effectively bought the presidency of the United States. He's worth $400 billion plus dollars. He could cede.
You act like
he could
only one billionaire on the planet.
He has, but he's the only one who operates like this. He is.
I'll give you a handful of others.
He buys a median. Jeff Bezos could have. Have they been
Bezos buys political influence? Do you think Zuckerberg doesn't buy political influence?
Zuckerberg was just defenestrated in front of the entire country and world this week when he announced that he was changing.
He was on the wrong side of a trade. He paid $400 million.
That's the point.
Last time.
Zuckerberg would never behave the way that Musk does. Musk is in a league of his own. He's writing the rules. No one's done this before. It's uncharted territory.
Oh, bro. Zuck was the maestro of 2020. He put in $400 million to the Democratic Party in multiple different ways. He outspent, accounting for inflation, he more than outspent Elon Musk in this election, in the previous one.
What did it get him?
Yeah, that's a good point. That's the better point. But the more interesting thing, I'm going to get off this topic because I don't think there's much market related here, and I don't have anything interesting to say particularly on it other than, well,
do you think that Musk has
taking all of his goodwill?
Okay,
Not
yeah.
only has he peaked,
long, meta, short Tesla.
Clearly, I don't play it that way. I think what Zuckerberg is doing, to me, it's so interesting. You get this guy, Elon Musk, starting to talk about social credit scores, and now all of a sudden, Zuckerberg wants to go to the same methodology. So basically, here's what it was. We're going to censor you to make sure you say the right thing. And now that there's this path opening to social credit scores, well, we don't need to censor you anymore because there's going to be a natural incentive for you to do the right thing. So in my personal opinion, you've got Zuckerberg trying to act holier than thou and get all of his credibility back from the people. But in reality, if you play this thing far enough, he's just going, oh, I can just let the incentives do this and I can get some credibility while we switch paths from overt censorship to self-censorship in the future. And so that's what I see Zuckerberg's whole thing as. And it sort of pains me that nobody's calling him out on that. He's just getting all this credibility back from switching sides and being more libertarian and being more free speech absolutist. Like, give me a break. The incentives are going to guide everybody to say exactly what they want.
Who's giving you credit? If I got to be honest, like, not to be condescending, if you're the kind of person who's like, Mark Zuckerberg is a good guy now because he's moving the Facebook content moderation team to Texas, you're the Mark. Okay.
I don't know what people say. It seems like that has been everywhere. So why is it so newsworthy in a positive way? I don't see why it's a good thing.
I just think this is all so hilarious that everyone is trying. Like, I see so many people pretending these are all about principles. Like, who's that guy from Malaysia, Ian Miles Chong, who's on Twitter everywhere? Like, guy only tweets things out when Musk gives them the approval first. But like, this is what I'm saying. Musk learned that he's like really changing the conversation worldwide. Like all this stuff coming out of the UK about Rotterdam, that doesn't happen without Musk. I mean, this was covered 10 years. I remember these stories clearly 10 years ago. It was right before Brexit. That was I remember those stories significantly. But yet he decides to bring them up again now because Keir Starmer's PM, and it's totally changing the conversation in the UK. He wants Nigel Farage out as head of the Reform Party, and he has the money to make it happen. He gets to do the same thing in Germany, France. He's gonna reshape the world whether we like it or not. So the question is, what other people are going to try to play that game too? Zuckerberg is. So maybe Zuckerberg's ascendant and Meta's ascendant and Tesla's no longer ascendant.
I think you're giving Elon too much credit. I've seen Elon go through these periods. He's go through cycles with the public. He'll get on fire. People will love him. People will love his products, and he will inevitably step on a rake and destroy all of his credibility with the people. And he'll go, just like markets, go through a down cycle with the public. And I think what he's doing right now, what he's going to do if he's not careful, is he's going to open back a lane for either reformed institutional media or less conflicted independent media. So I think,
but that's a good thing, though.
I'm not saying it's a bad thing. I'm saying right now he's got the microphone, and people only let you keep the microphone if they feel you're a fair, balanced, non-conflicted actor, or at least they understand your conflicts and are willing to play ball. But I think what he's doing right now is probably going to undermine a lot of his goodwill and open up opportunities for alternatives.
One of the reasons I think we have so much division in the country right now is we live in shared realities. Not a unique thought, but like one of the things that provides us a shared reality is the fact that we all used to tune into the same news every night, right? And it was Walter Cronkite, and he was trustworthy. And so a
nice CIA operative we could all feel comfortable listening to every night.
That's fine. That's the American way, Victor Jones. We're the empire. That's what we do. That's like half the business model here, right? Telling people what to think and feel. Go buy your stuff at Walmart. Go buy your Coca-Cola. Get your Ozempic shots, right? Get your Zyn. Well, this is just like a Saturday for me. But
yeah, I think your daily routine.
Selfie, Victor, a picture of me eating a Big Mac in the car with an Ozempic and life's about balance, Victor Jones. You got to stay balanced with those things. So, listen, I think we've exhausted the conversation. Listen, Musk's going to make a lot of money for a lot of people. And I think a lot of people along the way are seeing what he just did and go, wow, if my job as CEO is to deliver shareholder value, this guy just doubled his shareholders' value in the span of a month. What can I do to stay?
I don't know why this is so surprising. Everybody this is what politics is. It's exchanging campaign donations for political influence. The only difference is this guy did it in front of it was wholly transparent what he was doing. And in other cases, everyone does it behind closed doors in fancy dinners with handshakes and checks. And this time it happened on the internet in front of a viewing public. But this was no different than every other election. The numbers were a little bit different, and the tools were a bit different, and the methods. But this is how it works, is it not?
Yeah, but he's a first mover in this regard, and that's the difference, right? Like if when Zuckerberg or Bezos tries to use that same level of influence moving forward, they're going to be seen as posers. Like it's not that I disagree with Facebook's decision or Meta's decision to change their content moderation plans, right? Zuckerberg looks like, for lack of a better term, a beta male coming out of all this, right? He didn't have the courage to lead and take a stance on Trump. Not that again, you know where I stand on Trump, not the biggest fan in the world, but he didn't take a stance on Trump beforehand. He only changes it afterwards once he sees like proof of concept. Elon's done it, so I can do it. He says that he's changing his policies. Trump tells a reporter Zuckerberg's probably only changing the policies because of all the pressure he's been putting on him, and he doesn't want to deal with that for the next 4 years. I mean, he looks scared here. So I don't know. Musk has done something remarkable. Whether good or bad is who? Musk or Zuckerberg?
Zuckerberg. He's $200 billion. We should probably assume if you've amassed $200 billion in net worth that you're not the most. Your principles can be flexible.
Yeah, I mean, just like
the set of incentives.
The Musk thing just really blows my mind because I was looking at a stat the other day. He's worth so much money right now. He could buy every major sports franchise in the United States right now and have money left over.
I don't care. I got no problem with people who make money. I never liked that. I never liked that argument. I never.
No. I'm not saying that. I'm not saying that he's made too much money. I'm saying that his wealth, just to put it onto scale, we're like, oh, this guy has a lot of money. He just bought a sports team. Like, oh, David Rubenstein just bought the Orioles. He's really wealthy. Mm-hmm. Elon Musk could buy every Major League Baseball team, and every NHL team, every NFL team, every NBA team, every MLS team, every WNBA team, and still have pocket change, and still have several billions of dollars left over. So his scope and scale of influence, the next 16 months is going to be the Elon show. And I think that's why the Doge Commission is so funny, because it's going to do nothing. So this, again, opportunity. There are these contradictions that exist. And it's when there are contradictions that exist, that's when you have the big dislocation in asset prices, because something's got to give. And reality is undefeated. So we'll see where the prices go. And when reality bites, hopefully we are positioned correctly to take advantage of gravity when it returns.
What do you think about Tesla here? Is it still too expensive at 400?
I think Tesla is still probably undervalued given the level of influence that Musk will have moving forward. Because remember, Trump is a one-term president. They all joke about, well, maybe we'll get him a third term in there. You're not going to get a constitutional amendment passed, ratified by 2/3 of the states in the next 4 years, right? Mm-hmm. That's not happening. So realistically, Trump is a lame duck president. There's a reason why Musk, et cetera, are being so vocal, Vivek's being so vocal, because they're all jockeying to see who can get closest to J.D. Vance and who can be part of this new PayPal mafia that has the potential to take control of the Republican Party for the next decade. So, yeah, I mean, Musk isn't going anywhere. Tesla's probably undervalued. He's the most important person in America right now, like it or not.
I think Elon's influence has about 18 to 24 months on it, and then it runs out, because Trump is going to be Trump in the last 2 years of his presidency, and he's going to care less about leaving behind for the new Republican Party. And
what's he being right now, threatening to invade Greenland?
Hold on. After he gets past the point where, his political rivals, or if him and Elon were to have a falling out, where Elon could pay for a bunch of people to get primaried and then change the trajectory of what he could do with his second 2 years. I think Elon's influence is really heavy the first 2 years, and I think it wanes in the last two, and Trump's going to do what he wants to do in the last two.
Well, then I guess Peter Thiel's running the country moving forward, so best of luck to us.
Speaking of which, Palantir is taking a nice little haircut off of its near $85 high. It's now down in the upper 60s. I'm trying to figure out whether I want to start selling puts in this one. I'm long the stock, or whether it's still too early and this one could peel off a little bit more. What do you have an opinion on some of these stocks? This seems like it's fell in sympathy with a lot of the quantum computing instruments yesterday. Do you have an opinion on Palantir now that it's taken a nice haircut down to 68?
This feels like a sell-off that's in simpatico with the names like Rigetti and D-Wave and Ionc, right? Mm. Because in the QTUM, the quantum ETF, Palantir is one of the constituents. And so it feels like this is, a broad basket being sold off, so to speak. People who didn't necessarily want to buy QTUM, so they put together the constituents with different weightings, so to speak. So Palantir is getting sold off algorithmically, again, in simpatico. Has the business model fundamentally changed? No. Did it probably get too high too fast? Yes. You look at some of like the price to sales ratio a few weeks ago, it's high triple digits. Okay. All right. But then again, so is Amazon. And that's the thing about like these valuations. The companies that really do make it, the Amazons, the Apples, the Metas of the world, how many times did we hear in the 2000s and the 2010s, oh, we got to short this company purely because the PE is like 1,500 or 2,000? It's like, well, investors are willing to pay that when they really, really believe in a company. And Palantir is starting to, do some things that are making people believe a little bit more to justify those valuations. Palantir itself, though, relies a lot on government contracts, right? That is a big source of its revenue. It's like if the government took away carbon credit trading, it didn't matter they got rid of EV credits for Musk. That doesn't really hurt him. It hurts the competitors who are trying to break into the space. But if you got rid of carbon credit trading, Tesla would be a fundamentally different company. Palantir, if it doesn't have its defense contracts, is a fundamentally different company. So a bet on Palantir is also a bet that the people who are in the Palantir circle have overlap with the Trump administration. That's just the Al Karp of the world is friendly with Peter Thiel, and Peter Thiel is Elon's Musk boy, and blah, 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 right? This is also a bet on Trump. So
he's also J.D. Vance. There's a connection from Peter Thiel to J.D. Vance.
Yeah, because he ran he names all these after Lord of the Rings things, and a different type of fund. I don't know. Galadriel or something. I don't know. Valkyrie, I don't know. Yeah. Something other fund. You're right. So they're all connected. Again, Palantir having such close access to the administration, and Peter Thiel having worked for the better part of the last 15 or 20 years to get his own personal profile in the place where he could influence politics. I don't think that's going away anytime soon. If you wanted to make a bet which has better staying power over the next few years with Peter Thiel's influence or Elon Musk, I think Peter Thiel plays the long game much better than Elon Musk. He's not out front. He is the guy who operates behind the scenes, the shadowy puppet master. The left has Alex Soros now, and the right has Peter Thiel. They're mirror images of one another. But Palantir is part of that thesis. So the oligarchy reigns supreme in America.
I know. Just pick your billionaire who's got a value set that you think is at least somewhat aligned to yours.
Victor, we were talking about generational wealth. If you and I were actually stupider or smarter, we would have been out of Fartcoin and Dogecoin and Tesla out of the money calls, and we'd be on a boat somewhere in the South China Sea getting ready to be raided by the Chinese Navy for crossing territorial borders in our very expensive yacht, as opposed to doing this podcast.
No, dude. I don't. Now that you want to go down this path, I don't get gratification from any of that shit. So I don't get the yachts and all that stuff.
No, I told you I'm going the Honda Civic route. The wealthier we get. Like if I'm driving around town in a tractor, you're like, oh, geez, he won the lotto this week. Like he won the Powerball.
Yeah, wealthy enough to not give a about what anyone else thinks. That's the funny thing is you don't really need any money to do that.
I say, by the way, that I dress.
That's the whole game you end up learning. You start
Look
with
how I dress
like
today faces.
And then you go, oh, I care. You have a little bit of money, you don't care anymore, and you go, I'm wearing the same stuff I wore when I didn't have money. What the hell was that whole journey for?
Yeah, it's like you care about certain things, and then like you get a really good haircut, and your wife and your daughter, your fro's like, Daddy, that's a great haircut. I'm like, that was worth the $800. That was worth.
Oh my God, what are you talking about? What?
I live in New York. You don't know what inflation is like out here.
I think people in the chat saying that Palantir is going to fill these gaps. I'm guessing you're talking about like these right here around 45. Clearly, there was a Trump bump. This thing just took off after the election, given the political connections, I'm guessing, but also, if you're going to go an efficiency route, if you're going to go privatization route, could you imagine a company in the U.S. that's better positioned to take on some of that than Tesla, one, and Palantir, two? I want to keep going outside of these names. So I'm curious. You talked about healthcare bonds a little bit earlier. Like, Do you like any other pockets? You talked about some commodities earlier. How are you thinking about materials like copper, gold, silver, maybe even throw energy in there, natty gas? Like how are you thinking about commodities here?
Commodities look like they're starting to bottom again. The one tracking ETF that I like to follow the most, one of two, DBC or DJP. Let's go with DJP, for example. It's breaking the May and September, October swing highs right now. Obviously, oil is having a little bit of trouble sustaining its move up, and it's really moved back to the top side of a 6-month range. But copper is breaking out a little bit here. Silver's finding its footing again. Gold is holding up. We had the report last month that China began or resumed buying gold sometime in November, and given the look of the GC futures chart, I would bet it was sometime around November 14th. That November 14th closing low, mind you, ever since then, we have not moved back below on sell-offs. We hit, I think it was 2596.40 back then. The subsequent closing low that we've had closest to then, I think, was 2596.70. So a floor seems to be in place, and short gold and silver are weathering the storm that is a stronger dollar and higher yields. But commodities, they are still holding up, which I don't think can be ignored, because if commodities are bumping up here, that's actually a good thing. Hear me out. If commodity prices are going up and we're seeing a strong dollar and we're seeing the U.S. economy continue to grow, it's because the economy is growing that commodity prices are higher. If you had an environment where commodity prices were in the tank and yields are going up, that's screaming monetary policy mistake, fiscal policy mistake, debt crisis type of situation like you saw in the early 2010s coming out of Europe. So for now, higher commodity prices, higher yields, they're kind of conforming to one another, that it's not an emergency. But if you see commodity prices start shooting up and yields tanking, okay, a crisis. So that said, where do I like exposure right now? I have some long deltas in natural gas. I have some long deltas in copper. I would like to get some silver here. I want a little bit more price improvement back to 31. I know that means I'm going to be late, but I prefer the comfort of feeling like I'm right. Gold looks like a symmetrical triangle, like it's going to break out still. So broadly speaking, commodities look pretty good. Then I suppose just as a point of interest for people, I know we don't talk ag all that much, but this week on Friday is the WASDE report, the monthly report about grains. Corn has an IVR, I think, in the mid-40s. Soybean has an IVR up in the high 70s or low 80s at this point in time. So if you're looking for something that's non-correlated to non-farm payrolls this week, you could always look to energy or ag. Ag in particular should have some action on Friday.
I had this when you were talking. I had this big grin on my face because one of the shows before the end of the year, when I was just yakking away on a mic by myself, the point I was making is yields and materials can't both be right.
Right.
The premise was yields are either signaling high levels of growth or inflation, and materials are effectively signaling growth slowdown and serious disinflation, if not deflation, given the severity of some of the price moves. And my point was both of those two things can't be true, and I liked the idea of going long materials, I thought, and particular material stocks like Newmont Mining, I thought Freeport, McMoran, and then I liked a lot of the energy companies as well, which I thought had gotten beat up at the time. They've recovered a bit over the last couple of weeks, but I thought had gotten beat up at the time on the same exact premise. And then I liked going long bonds in the case that materials were telling the truth and yields were the ones that had to make the adjustment. And so one of those trades has worked out. The material side of that trade has worked out. Long bonds, as you know, hasn't gone anywhere. But I tend to agree. We're seeing a reverse in some of these material stocks. I like energy stocks still for several reasons. I'm going to throw that at you as sort of my last question. You used to be an oil man. We talk about it from now and again. Oil's climbed from the mid upper 60s up until the 70s here. Natty gas has been an absolute ripper. Does Chris Vecchio, how does Chris Vecchio feel about energy stocks?
I think I'm allowed to be an oil man again, right, Victor? Like I can
bro.
I can wear the whole costume.
Sure, why not?
Well, try not to get canceled to go to HR here. So
it worked for Trudeau. Worked for
Did it?
Trudeau.
Did it?
Yep.
You weren't asking about blackface. What was the question?
What do you think?
I'm joking. Oil man. I'm just playing this up. So here's the thing. Like in 2022, this is kind of a similar setup, right? Where you think about the sectors in the market. Oil prices, you look about like energy sector as a percent of the S&P 500 right now, exceedingly low. The valuations just aren't there. Single-digit PEs for some of the individual names. It kind of takes on the same thing as healthcare right now. It's not the sexy thing, but it's kind of a stable thing. And so if we are going into a world where all of a sudden, we're talking about all these prices being higher and uncertainty over interest rates moving forward, these oil companies, they print money. Those pharmaceutical companies, they print money as well. I happen to be very bearish on the idea that RFK Jr. is going to get anything changed with respect to the pharmaceutical ads being played on TV. I know some people are saying like, oh, this is going to hurt their bottom line if you can't have DTC advertising. We've tried to fix this before. The courts have already ruled that because corporations are people now, that telling a corporation what it can or can't say in the course of its advertising is infringing upon the First Amendment rights. Several years ago, Merck was sued to try to get them to list, the cost of their drugs as part of their ads. And the court went back and told the Trump administration, no, you can't force them to do that. They have a right to not disclose that information. And so the Trump Department of Justice dropped the lawsuit. So sure, we can try to change things with oil and pharma. Oil, if you're a Democrat, pharma, if you're now on the right, apparently, if you're a Republican. The reality is the system is sclerotic and calcified to a large degree. So the point I'm getting at there is, if we do see a rates higher world and there is some fear of a slowdown, I think oil has a floor under it for the time being. We do need to refill the SPR. So if it gets too low, we'll just start buying and buying and buying. And then moreover, it's going to produce a ton of dividends. These companies are so strong on that front.
That was my thought as well. The bearishness in the energy companies comes from the post-election people pricing in a pro-energy policy, which means more supply, which means downward pressure on some of these equity names.
But they can't even do that now. The offshore drilling ban that Biden put into play this week, it can't be undone with it can't be undone with an act of Congress, because Obama did the same thing going into Trump's first term, and Trump tried to undo it with executive order, and you can't. It needs to be done through Congress, and so then Trump had to go through Congress to get some of that offshore drilling stuff lifted. So in the short term, right, like where is this new supply going to come from? Not here in the U.S.
My point was a lot of that is already in the price. That was
sure, yeah.
That the point of the negativity about RFK and his potential impact into these companies, the Secretary of Health of HHS, it's probably mostly discounted in the price to the extent that it can be known. And the same thing with energy, that a pro-energy policy is likely already discounted into a lot of these things. Could that change? Could we get new information that changes these trajectories? Yes. But I think for now, you're probably getting a decent price on both of those. That said, Chris, it's always a pleasure getting to catch up with you. My good friend, if the people want more from you, and they should, can you tell them where they can go?
Well, tomorrow not here because we're all going to be mourning Jimmy Carter's funeral, Victor, as I know you are. So follow me on Twitter at CVecchioFX. Friday, I'll be back. Futures Power Hour, 1 p.m. Eastern, 12 Central Time. Generally speaking, that's Monday through Fridays here on Tasty Live. Of course, overtime on Monday through Thursday, right after last call, 4 p.m. Eastern, 3 Central. And we're rebooting the prediction trade. That's going to be back sometime shortly as well. Vic, we didn't have Radigan on today, but if people saw him on CNBC this afternoon, they were celebrating the 18-year anniversary of Fast Money, so be sure to go check out our coworker, friend, and my co-host of Overtime, Radigan.
Very cool. All right, my friend. We'll see you all next week, as this is Synthetic Friday for the show here. You can follow me at Victor Jones, the Owen Jones, the Zero, because I like to be difficult. We'll see you all back. Same time, same place, same great network, only on Tasty Live. Peace.